Volkswagen has halted vehicle production at its Gläserne Manufaktur plant in Dresden as of 16 December 2025. The decision marks the first time the German automaker has permanently withdrawn production from a factory on German soil. Management says the move is part of a broader global restructuring plan. The Dresden facility was never comparable in scale to Volkswagen's main production hubs. With limited annual output, it functioned more as a showcase than a volume factory. That structure made the site increasingly difficult to justify under rising cost pressures. Volkswagen executives point to high operating expenses as a key factor behind the closure. In smaller plants, unit costs are significantly higher, clashing with the company's efficiency targets. Dresden was considered one of the most vulnerable sites in this respect. Energy costs stand out as a decisive issue. Industrial electricity and gas prices in Germany have risen well above the European average in recent years. This has placed direct strain on energy-intensive sectors, such as automotive manufacturing. The loss of cheap Russian gas has permanently altered the cost base of German industry. With the transition to alternative energy sources still incomplete, companies are forced to rely on more expensive solutions. Smaller plants like Dresden have struggled to absorb these costs. In recent years, the factory mainly produced the electric ID.3 model. However, electric vehicle sales across Europe have fallen short of expectations. Demand growth has lagged behind Volkswagen's initial forecasts. The reduction of EV subsidies in several countries has influenced consumer behavior. High interest rates and rising living costs have further slowed new car purchases. As a result, production capacities are being reassessed. Volkswagen's sales pressure is not limited to Europe. In China, the rapid rise of domestic manufacturers has eroded the group's market position. Declining revenues from China have intensified scrutiny of high-cost European facilities. The company aims to concentrate resources on larger, more efficient production sites. Under this strategy, symbolic but low-volume factories like Dresden have lost priority. Management stresses that economies of scale have become more critical than ever. Technology challenges also form part of the backdrop to the decision. Volkswagen has faced delays and cost overruns in software development. As software becomes central to modern vehicles, traditional manufacturing strengths alone are no longer sufficient. Germany's innovation capacity has increasingly come under debate. Critics argue that the country lags behind US and Asian competitors in digitalization and software. This gap is adding pressure on technology-driven industries such as automotive. With its glass walls and distinctive architecture, the Dresden plant long served as one of Volkswagen's flagship projects. But symbolic value could not outweigh economic realities. The company is now prioritizing financial balance over visibility. Volkswagen says employees at the site have been offered transfers to other facilities. The company has reiterated that no compulsory redundancies are planned before 2030. Still, the end of production has created uncertainty for the workforce. Trade unions warn that the social impact of the closure must be closely monitored. There are concerns that Dresden could set a precedent for other sites. Volkswagen insists the decision is an exception rather than a trend. The factory itself will not be abandoned. Volkswagen plans to transform the site into an innovation campus in cooperation with the state of Saxony and TU Dresden. Artificial intelligence and advanced manufacturing technologies will be the focus. However, this transformation will not replace traditional vehicle production. The new structure will center on research and development. That implies a very different employment and economic profile. The Dresden decision has reignited broader questions about Germany's industrial model. Analysts are debating how sustainable high-cost manufacturing is in an increasingly competitive global market. The automotive sector sits at the heart of this debate. Experts note that this is less an abrupt collapse than a gradual transformation. Production is not disappearing entirely, but shifting in scale and geography. Dresden is seen as an early signal of this adjustment. The German government continues to promote incentives aimed at keeping industry at home. Yet it is widely acknowledged that corporate decisions are ultimately shaped by global market forces. The Dresden case highlights the limits of state intervention. Volkswagen has emphasized that its core production plants in Germany will remain operational. Still, analysts point out that similar cost pressures are affecting other sites. Caution now dominates the outlook for the sector. In the short term, the economic impact on Dresden is expected to be limited. Over the longer term, however, questions about the future shape of Germany's automotive production map are becoming harder to ignore. Conclusion: hidden shifted out. Volkswagen's decision to halt production at the Gläserne Manufaktur in Dresden reflects a convergence of high energy costs, weak demand, and technological transition. It is not just the closure of a single plant, but part of a wider structural shift. To follow these critical developments closely, don't forget to subscribe to Hidden Shift, like the video, and share your thoughts in the comments.